Hello, everyone. Welcome to the Visionary Pulse podcast. This is a podcast where we're going to be touching on business topics alongside with some personal finance and any relevant news that might impact you from day to day. I am your host, Abdi, and thank you for joining me on this journey of mine. This is actually the first podcast I'm going to be doing, and there's a lot of nervousness with anyone who's achieved any new venture in their life. They can attest to how difficult it can be to start something new, but I'm very excited and very terrified. So those are very good combinations of things to achieve anything. It kind of puts some fire behind your back to get things going. So I'm very excited. Now, a few things I would like to discuss before getting started. Why am I starting a podcast? That's a very good question. Well, one of the reasons is being someone who is in the accounting industry, means I get a lot of questions from personal finance side to maybe some accounting side. Not so much accounting because that's mostly for businesses, but also tax side. And I seem to be giving the same answer every time. So I figured, why not just make a podcast where I can talk about all these things, and then we can go ahead and just link it to the people who have these questions, even though I feel like I'm probably still going to be answering these questions all the time, but that's all good. This is a good way for me to get my thoughts on paper, so to speak, and be able to share them with a wider audience. Secondly, what are some of the things that I'm going to be touching on later on? Like what are some of the future plans for this podcast? Well, first of all, I'd like to get good at this first. Let's fix the problem ahead of us before we get too in the weeds about where this is going and how this is going to blow up. But for now, my sole purpose is to make this podcast as listenable as possible. And secondly, I actually want to go in interview direction, because one of the things that I love to do in my life is really listen to people's perspective. I feel like when you talk to someone and they give you their life's story in a very condensed and efficient way, and they really break down all the gems, all the golden nuggets that they've learned throughout the years in a very condensed way, that all the mistakes they've made and all the lessons they've learned based on that, having the ability to just listen to that, I don't think a lot of people understand how valuable that can be. So that's literally one of my favorite things to do, is to listen to people's stories and lessons that they've had throughout the years. It's crazy because the people will share that stuff with you for free. And I mean, if you were to quantify it, that stuff has got to be worth a lot of money. Like I was watching someone talk about this, and he was comparing it to, I guess, liquid gold, because it really is that. You're distilling years, decades, a lifetime worth of information into manageable bite-sized pieces of liquid gold. And this is actually one of my this is one of my big interests, just to listen, not from a professional perspective or monetizing perspective. I literally just love to hear people's life story, especially the older people who have just a mountain of information in their brain. And a lot of people don't seem to grasp the vastness of 60 years, 70 years of experience lived, and lessons learned. So I, however, really feel the impact of that when I talk to an older person, especially my grandmother. Shout out to my grandmother, the wisest person I've ever met in my life. It's getting up there in age, but she's sharp as a tack. Can't get nothing past her. Literally, I've met rich people, PhDs, doctors. Like literally, no one has a finger on her. It's crazy. Anytime I have the chance to talk to her, I will. So yeah, that's a little bit about where I want to go with this podcast. There's also a little bit of I want to make some YouTube videos based on maybe certain topics, but that's a little bit down the road. I still have a lot of editing learning to do. But that's something that would interest me in the future. All right, now that we got all that good stuff out of the way, I want to start with a personal story of mine, and it's funny if you know me in real life, you know that I won't shut up. Literally, like, you can't get me to shut up. I will talk your ear off about literally anything, and I mean anything. So it's been really funny for me to get this podcast started and realizing that I have a lot of trouble talking in front of a camera. Not necessarily a camera, but just an empty room and an empty mic. It's frightening, really. But I feel like I can get over this stuff. So here's a shot to everyone who's trying to do something new. It's very difficult, but that's the problem with growth. If you don't try something that actually terrifies you, and don't have that fear of like, oh my god, I'm gonna look like an idiot. Like you can't learn, like you can't grow. So you want growth. Like, I don't think anyone doesn't want growth. Everybody wants growth, but they don't. They don't want to put themselves at a chance to sound like they're ignorant. So the problem is you can't get to that part without sounding ignorant first. A wise person or a very competent person was an ignorant person who learned. So that's a very encouraging thought to anyone who decides to start a podcast or any venture in life. All right, the first thing I actually want to talk about is the interest rate hike from the federal bank of 50 points. Now, what does that mean? A 50-point increase is basically the national bank. For us, it's called the Bank of Canada. It's the rate at which the banks are willing to lend each other. Now, it might not be that for you, like someone, an individual or a company who is actually borrowing money from a bank. You're going to see that rate a lot higher because, in theory, they need to make a profit on the interest rate that they're being charged. So if they're being charged at 1.5%, it doesn't make any sense for them to charge you 1.5%, but it does make sense for them to charge you 3%, so that they pocket the. So they borrow money at 1.5, they charge you 1.5, and your effective rate is 3%. Now, why is that important? A lot of people have noticed that the affordability of the housing market has been declining, I guess. The generations that I come from, the millennials, the Gen Zs, they have not been able to capitalize on some of the market share that our previous generations have been able to capitalize on. We have the lowest market share of any generation when it comes to house ownership. Now, there's a bunch of different reasons for that, but the main one right now is the ridiculous level of inflation that we're experiencing. I mean, I don't think anyone hasn't noticed the inflation. If you even drive or walk outside and look at prices, gas is right now $2.15 for a liter. Now that's outrageous. Driving now hurts, and I mean, that might not be the worst thing for the environment, but for your personal finance, it's definitely taking a hit, and it's not a great feeling to have to be like, hey, do I really need to go this place and drive, or can I just not do the thing? And I feel like I'm finding myself, even me, who's I consider myself in the middle class. I'm not super struggling financially, but even I'm looking at these prices and be like, hey, do I really need to do this thing? And I'm finding that the answer to that is no a lot of the time. So it's been an interesting couple months, or almost a year now, I think, of this of these prices. Now, the increase in interest rate, basically what that means is, in theory, it's going to decrease the prices, or there's two vectors in price in the economy. So there's the demand and then there's the supply. What they're trying to do is curb the demand. And it's a nice way to say they don't want you to buy much, so that the demand on the businesses drops, so that they have to drop their prices too. The problem with that is it's not nice. What they're basically trying to do is increase the price of decrease the demand on everything, including stuff that you need, like housing or food, which, I mean, it doesn't matter how much you're going to charge for food, people are going to pay it. You can't live without eating. Like, there's no negotiation when it comes to that. Like, I need to eat. No matter how much you charge me, no matter how unhappy I am with the price that you're charging me, I have to eat, so I have to pay that price. So it's kind of a blunt instrument that it just hits the economy with. And to them, they're just having metrics, right? Like, they're looking at, hey, the housing market, the average house is whatever, 3-bedroom townhouse is selling for like $750K, something like that. And with this rate increase of the interest rate increase, it's definitely dropping that price. The problem with that is it's not as relevant to you as you might think it is. Now, if the interest rate goes up from 1.5% to 3% for you, or 4 or 5% for you, it just means that you can afford less house. There's less of a house you can afford with these prices. So a house that you might have been able to afford that is worth $700,000 at 1.5%, now you're not going to be able to afford a $600,000 house at a 3%. I'm just giving you rough figures, but like, yes, the house price decreased, but the affordability of the house that you want is still out of reach, because a mortgage payment, if you can afford a mortgage payment of $3,000, it just means that you can afford less of a house. For $3,000 might get you a $600,000 house. So it's not a great tool in order to in order to address the problem that you're trying to address. So I broke it down in a few different areas. So in accounting, we do a lot of stakeholder analysis and how a particular decision affects a stakeholder over another. The first stakeholder that is affected is the buyer. So how does the buyer affect it? He can afford less of a house, so that's not good. The seller. Now, the seller is actually the person who gets hurt the most, because yes, the house, you can afford less of a house when you're buying, but the person who is selling is directly impacted with how much money in your pocket you get, because you bought the house at whatever, let's say 400,000, now it's worth 600 over the last 10 years. You're trying to pocket that $200,000 difference. Now you can't sell that house for that price because no one can really afford it. So now you drop the price to 550,000, and literally that 50,000 just vanished into thin air. So it's definitely not helping the sellers either. Who is it helping? I mean, I feel like it's just the politicians to be like, hey, the housing price is dropping. Okay, great, but that doesn't really impact either. That doesn't help the seller or the buyer. So, I mean, it's a short victory to I mean, unless you have cash, or you just straight up cash to buy $700,000 house like that. But I don't think any of my listeners, or most people in the world have that kind of money. So doesn't really impact them. Another thing about the rate increase is, yeah, you might be just a regular person working a 9 to 5, and you might have a spouse that also works a 9 to 5, and you're making ends meet, not much in terms of savings, and you're seeing all these people celebrate the fact that there's the interest is super low, and money to borrow is as free as it gets. You might not see the benefit of having cheap interest rates, but I promise you, you will feel when the interest rates are going up, because that's when businesses start to struggle, and that's where you start seeing price increases in consumer goods, or even housing, or it impacts everything. Like the people who are providing these services, they might make money when the interest rates are low, but when the interest rates are high, they're passing you on that cost. So you might not benefit when it's going down, but you will lose when it goes up. So unfortunately, that's another unforeseen side effect. Well, I mean, unforeseen, that's a matter of perspective, but an unwanted side effect of increasing the interest rates. This actually brings me to my next point, which is, how are you supposed to navigate this, right? Do you get a second job? Cut back on your spending? And this is actually something that you have the most control over. The problem is people in this country have very little in way of saving in the first place. Now, they might be operating at a loss every month. They're in the red, probably $200, which increases the overall debt, which has now become more expensive. Or you're barely, you're making it paycheck to paycheck. You're not really going down in your savings, or don't have any savings, or can't increase any savings. So you've already thought about cutting back on a few expenses. But here's the problem. If you're operating at a fairly tight budget and you're already not overspending on things you don't need, where are you going to cut back? What's the leeway you have? And the real answer is you don't. A lot of these finance channels, they really focus on this aspect because this aspect is probably the thing that will impact you the most. But the dirty secret that they're not really telling you is there's two parts to this equation: how much you're spending and how much you're making. At a certain point, you really can't cut back anymore. Like you're not going to eat less so that you have a little bit of savings. There's certain things that you just cannot do, and I'm not the aspirational personal finance guru that says you can eat ramen noodle every day and be a millionaire by 35. That's not really realistic for most people, and I say most people, like probably 99.999%. There's like 5 guys or girls, that are able probably to do that. Most of us cannot do the things that are required to really cut back on the spending. So what's your solution? Well, in recent times, I've become more and more of the advocate of you should start your own business. And I know it's something that's very scary to get started and dive into, because one, what kind of skills do you even have to even open a business? What chances do you have in what is likely a recession right now to succeed? I mean, you have all the odds against you. But here's the thing. At any moment in time, it's always the odds are against you. The odds are never in your favor. The odds are in the favor of the people who have been doing this for a while, and they are not going to let go of their competitive advantage just to help you get into the market. So what I say is, there's really no good time to start a business. There's none. Not in a good, not in a recession, not in a booming market. And I want to give you an analogy. I was watching this YouTube channel, I forget, a while back. They were mentioning how if you want to start a business, it's not really about the best idea, but it's more about the best execution. There's a person who decided, hey, I'm going to move fridges. And he's charging $150 per fridge to be moved from A to B. Takes him about 30 minutes for each run. My man is booked up for about every day for the next month, doing 10 fridges a day. Now, quick maths. That's $1,500 a day with a fully booked up schedule for the next month. Your idea does not necessarily need to be ironclad, top down, best idea of all time, or even a very good idea. All you need to do is figure out, how can I make money? Is there a market for it? And trust me when I tell you, in a recession, which is likely, I'm going to be saying this a lot, which is what we're in, there's always money to be made in bad times. It's harder, yes, but you have the flexibility to pivot versus a big company who can't really afford to pivot to that extent. They've got resources deployed in a bunch of different areas. You can't really move up and do something else. Versus you, who's just starting, who has a little bit of money to throw around, you can do whatever you feel the need is in society right now. So trust me when I say it's not really your idea. And there's money out there to be made. Sure, like the average person doesn't have money to overspend, but the average successful business, they have money. They've raked in record profits in these last couple of years. Some, I think I was reading Chevron, an oil company. I think they tripled their profits from last year, Q1 this year versus Q1 last year. Tripled their profits. Tripled. So trust me when I tell you, there's money to be made. It's just you have to go out and get it. It doesn't matter what. Honestly, to a certain extent, you got to put your pride aside. Think about something that would work and then just go for it. It doesn't matter how it is, And here's the impact I feel like it will have on people's lives. You have, let's say, a full-time job, right? Let's say you make about $2,500 a month. So probably $1,250 per 2 weeks. If you make a business that increases that by maybe $1,000 a month, which is very reasonable to do as a part-time, you've effectively put yourself in a category of job, like if you were getting a job somewhere else, where you're making like $20,000 more dollars. So $1,000 a month, you divide that by 4, you get $250 a week. That is very doable on the vast majority of people. For example, I was actually talking to someone, and I was telling them, look, you make these really good pastries, and if you make them for a business, I am 100% sure they will buy them from you at a higher cost than they're getting their own pastries, because it's better. It's 1,000 times better, and it has that homemade touch. And then I broke down the expenses and the things, and I was like, look, you can make easy $400 a month and keep your regular job and add $400 a month. That's $1,600, $400 a week. I mean, that's $1,600 a month. That will change your outlook, okay? That goes from zero savings, or I'm in the red every month, to, hey, we got savings now. Like, hey, let's plan a trip kind of thing. Oh, let's expand our business. Like that, you don't need something amazing to really do life-changing things with it. So that's the only perspective I would like to give you guys. It's very important to keep perspective. Adding $1,000 to your income every month is very, very life-changing for most people. Most people. Sure, it might not be, hey, let's go to Fiji every weekend, but hey, if you don't have to worry about a few extra bills that are coming your way, or the bajillion dollars that goes in your gas tank every day, it really gives you that stability, And this goes to kind of the last thing I want to talk about, which is decision making. Now, decision making is a lot of people, including my beautiful mother, which I feel like ever since I was a kid, we hash things out together where she's like the devil's advocate every time. And I was talking to her about selling something, and how she said no, just keep holding it, and it's gonna be good, because holding is always the better answer. And I want to tell you that holding or any kind of strategy that you have in your life is not going to be enough. Okay, you have to analyze the pros and cons of every decision. There cannot be one decision that you cling on to and that will be your end all be all. I was actually explaining this to my wife the other day, where I was telling her my strategy for the stock market, and she's dabbling now. She's looking at some of the reporting that is around the stock market, and she's like, "Hey man, it's all red. Like everybody's just losing money. Why are you putting more money into it?" And I tried to explain to her, look, sure, the investing strategy to put money into the stock market might not be the best idea of all time. I get that, but there has to be a strategy of investing. Doesn't matter what it is. If you like gold, invest in gold. If you like diamonds, invest in diamonds. If you like whatever, invest in that. Because as we're standing right now, okay, you have money in your savings, and we have this misconception in general from that was passed down to us from our families and whatnot over the years. Hey, take some money, put it in your savings, don't touch it. Which is a great idea at the start, but there's a few steps missing, because that money every year is losing right now almost 9% of its value. So that's like I have $4,000 in a bank account and I'm losing almost 400 every year, literally doing nothing. So there's no way that you can recoup that just by keeping it into a savings account. You have to invest. You have to invest in things that have value. For example, everybody has a store of value in something, right? If you're super old school, you're like, hey man, gold, you can't go wrong with gold. Buy some gold. Great, buy some gold. If you're like, listen, the stock market has provided you an average 15% return over a 35-year time frame, any given span, then good. Invest in that. You're like, hey, look, I want to have a solid house that I can look and touch. Buy a house. Okay, buy a rental. You need to invest your money. Do not leave it in liquid form for too long, because all that work that you're doing, and I believe that most of you are working very, very hard and scraping the bottom of the barrel to put a few dollars aside. It is very sad to see that money be valued less and less, literally every second that's passing. Just like I have conversation like this with clients all the time, I'd like to preface, look, if you succeed, I succeed. All I want you guys to do is really improve your lives and be at a better spot later than it is now. So that's where I'm going to put my shameless plug for my company, Visionary Accounting, Tax and Advisory. We try to help a lot of businesses achieve their goals, and I would like to do the same for you. If you have a particular goal, we can have a chat and discuss some of the things, and I try to be the devil's advocate and try to problem-proof your strategy. So if you'd like that, please visit our website at Visionaryadvisory.ca. There's also the corporate tax deadline that's coming up. If you need help with that or financial statement prep, I am very happy to help you guys with that. There's also the season where the CRA is going to be sending out notices to a few taxpayers to ask for document requests. Most people can do those like fairly well, but if you do have any questions towards that, feel free to reach out at Visionaryadvisory.ca. Please let me know any comments that you have, any topics that you'd like me to discuss, anything. I would love some feedback. I know that there's 1,000 things wrong with the podcast today, but I have an open mind, and I'm very thankful for you to listen today. And any comments, any suggestions, any constructive criticism, I'm all ears. I want to improve, and I know that I have a lot to do so. Thank you very much for joining me on my very first podcast, and have yourselves a wonderful day.